factory calendar, right? So we want to know what's happening. And there are two currency pairs that I would probably want to pay a little bit more attention to next week. So let's just take a look at the Forex factory calendar. All right, here you go. Okay, so a couple of things now. The part that kind of interests me over here is what's happening on Wednesday. So Wednesday, right, we have a whole bunch of New Zealand data coming out. Official cash rate is stated to be 5.5%. That's the so-called prediction. And then of course you have the monetary statement and all that. So there's a couple of things that we actually want to look at on these two notes, because in the news, right, there are a couple of concerns that are happening in New Zealand side. Now there's this thing called the OCR, which is kind of like the official cash rate, right? So the official cash rate for the New Zealand side is going to be adjusted, and now there's some questions about whether or not it will be increased by 0.25%, which is the current projection, to maybe 0.5%. So there's a bit of talks going on about the OCR. And if we look at this particular article over here, let me just share it with you guys. Okay, so this particular article over here, this was written, I think, just today, actually, 21st May at 5 a.m. last night, New Zealand time, probably 5 p.m. So what's the budget for this week's OCR decision? So this will be a bit interesting, this article. They talk about the, the current rate at 5.25%, expected to increase. Now, you don't really need to know a lot of details in there. It just talks about what is the purpose of this, and the net effect of what they're trying to do is trying to curb inflation while trying to stimulate demand at the same time, right? So the bond issuance will increase significantly with an additional 20 billion of bonds issued over the next 4 years, which is twice the rate predicted by the ANZ. All right, net debt is forecast to reach 95.3 billion by 2025, 26. This is a bit far off. Now, Kiernan still expects a 25 BPS increase in the OCR next week and a peak of 5.75%. Westpac also earlier said that he expected a 6% peak if needed. So a lot of eyes is on the statistics coming out from the New Zealand side. It's going to be 5.5 next week, and then a gradual increase maybe in June, July, expecting to hit about 5.75%. Now, what does that mean for the New Zealand currency itself if we're trying to position ourselves over a medium to long term on the currency? Now, the currency, okay, this is the article. I hope you guys can see. All right, so the currency rate, right? We're talking about the carry trades, So the carry trade currencies that are popular right now are, for example, the USD with an interest rate of 5.25%, followed closely, of course, by New Zealand, whose current interest rate is also about 5.25% and maybe going up to 5.5% next week. And what the carry trade traders, what that means is it's going to be quite profitable to hold a cross between, for example, the USD and the JPY, right, with very low interest rate, or the New Zealand dollar and the Japanese yen, again with a low currency, with a very nice interest rate differential. So it's more for a medium to long term positioning. You know, if you were going to position a carry trade that's going to carry off for a couple of months, etc., as part of the portfolio, then it would be good to kind of hold currencies with a very wide carry trade differential, which is kind of what's coming into season right now. Now, if we talk about this a couple of like maybe last year or mid last year, or maybe early last year, where interest rates are all so low and the differences are very, very little, right? I think globally everybody was looking at 0% interest rates to 0.25, 0.5, the max, right? And suddenly now this interest rate differential got so much wider. So if you're positioning for traders who have medium long-term positions, definitely the carry trade differential will impact their decision in where to position their so-called portfolios, right? So what is interesting for the New Zealand dollar is there is talks, or there is a sentiment that there is a very good probability of interest rates popping up to 5.75 and maybe even a 6% towards the end of the year, maybe mid next year, right? So what it means is, for carry traders who is holding a position on the New Zealand dollar, and let's just say Japanese yen, right? It is for the long haul, it is in their interest to kind of hold it off for the long haul, right? So let's take a look at the Kiwi yen. Now, the Kiwi yen, has been swinging in between this range for the longest time. This is a daily time frame. So from May 2022 last year till May now, it's almost a year. And last year in May 2022, it was also during that period where the Japanese governor said that they were going to keep the yen interest rates low, all right? And then, of course, a whole bunch of stuff happened over there and it's now there. Now, why am I interested in this? Is because price at the Kiwi yen is revisiting a nice, decent horizontal level. Now, of course, with that carry trade in mind and with that positioning in mind, I am looking to see whether we can take a pop of the Kiwi yen towards the next segment. So when I talk about segment, right, let me just zoom out a little bit. So this is the zoomed out view. All right, or maybe let me go to a weekly time frame, might be a little bit clearer. Now, this is what I'm interested in. For the longest time, for almost a year, what's been happening is, let me just draw this out. But what's been happening for the entire, this is a weekly time frame, so this is like almost a year. Almost a year, the Kiwi yen was kind of hanging in there, right? In terms of this very nice big range. So it's like a $5 range price is just, bing bonging from this area. Now, why am I interested in this currently is because next week we are going to have two, maybe just one big news coming out from the Kiwi side, which is where are they going with their interest rates, right? If they are going to be as aggressive, as hawkish about their interest rates, then this could see us popping it up into the next segment. All right, so this is the first consideration that I'm having. The second part of the news coming out, that potential news coming out, is over here. Let me just find the article for you guys. All right, so this is this article. Okay, this article is written. Let me make sure I'm sharing it. Okay, so this article was came out on the 19th of May. So this is just like 2 days ago. And as always, one eye is on Bank of Japan because we want to see whether the new governor Ueda is going to do anything different from their monetary policy. And over here, just 2 days ago, Bank of Japan's Ueda vows to maintain easy policy, rules out chance of an early exit. So while there's a lot of noise about, hey, this new governor in town, maybe we are going to increase interest rates, the news comes out outright, straight from the horse's mouth, that after this news conference, the talks are Japan will be a dovish outlier. Okay, patiently maintaining ultra loose monetary policy, which means the kind of like fear of Japan suddenly increasing the interest rates is probably a little bit more, towards the low probability side. All right. So nothing really interesting in this. It's just a lot more other information. So over here, no change to the 2% target. All right. Japan's inflation is 3.4% in April, which is well above the 2% target. All right, and the dovish tone, it is still a dovish tone. So while I don't need to know every single word of the article, I'm just trying to go for the tone of the article. So once this article comes out, there are going to be a lot more Japan yen bears coming back into the market. So what I'm doing is I'm trying to look for this differential over here. We have Japan who says that no, they're not going to change interest rates. They're going to remain pretty bearish. And over here we have the New Zealanders saying that they're going to be a bit more aggressive, a bit more hawkish, right? Pushing their interest rates to 5.75, maybe 6% in the next 6 months to a year. So potentially, why is it of interest right now? Is because on a weekly time frame, you can see price already visiting this I would say this resistance area. Now, as you guys know, most of the time, like there's going to be a 70% chance of the time price is going to bounce back off if we just take pure statistics. But what about that 30% when price breaks? This is like a 30% chance. So the probability is low in terms of the statistics as a horizontal level. But what I do like in favor of this chance over here is that the monetary policies of both the Kiwi and the yen is telling us that something might change over here. All right, so two ways as a fundamental trader, two ways I would want to position myself next week is with an eye on the news, especially on Wednesday. I am going to look for potential long signals over here. All right, if we talk about cyclicity, right, and if we talk about a bit of the technicals here, a bit of the cyclicity indicators over here. Hang on, there's my pen. Okay, if we talk about cyclicity, right, we already have on the daily time frame, and now back on the daily time frame, we have the cyclicity showing us that it's going back up. Now, what's going to be interesting, what is already interesting is the nearest previous high has been broken back here. The high has been broken back here, and we have a high of 2022 over here. Now, once this is broken, I'm pretty sure it will just trend all the way up to our next horizontal level. The hardest part is trying to figure out, will it just pop back up here and then come back down? So this is the part where I think a lot of us will have to be a bit more careful and be a bit more strategic in planning our trades, because there is going to be a chance where the noise will take us a bit of pop, all right, and then it's going to come back down as would, and then price will just stay in this entire area again. All right, so this is probably good for those who are range trading, but there's a good probability that the moment price breaks out and gives me that, that bounce off the horizontal level, I think we have a decent probability of hitting it back up to the next segment, at least until news has changed in the New Zealand yen side. So why I do like this particular chart, right, is because it gives us a current opportunity. It gives us a nice opportunity being at a area of, I'm pretty sure a lot of reversal traders are going to be here. I'm pretty sure we are going to have a lot of people trying to short this part over here. But of course, the banks and the hedge funds would have the ability to kick out these traders over here, and that is what we want. We want to follow the big fish. Okay, we don't want to follow the masses that are trying to short over here. So what we need to do is get confirmation. Okay, once we have confirmation, we get that break and retest, or we get the the whatever strategy you're using, we get that confirmation. Use your risk management. The moment it breaks this way and it breaks above this area, okay, I'm pretty happy to start going long on the Kiwi yen, just from a fundamental perspective, with a with the Kiwi being a little bit more aggressive on the monetary policy side and the yen staying dovish on the monetary policy side. So this is a trade that I'm looking at for the next couple of weeks. All right, so it might not appear next week, but the first indication we should have is on Wednesday when the news comes out, and then we see the reaction to the news, right? So a lot of this price, so if we look a little bit closer, okay, a lot of this nice green candles are probably already, traders are positioning themselves to take it long, right? So normally, if next Wednesday you have the interest rate increase, this is already the reaction that is pre so-called trading into the news. So there are traders who are already positioning themselves for this bullish move, right? So if Monday comes, let's not be too impatient and enter straight away. Let the profit taking, let the markets shake around a little while. And I think on Wednesday, Thursday, Friday would be a better time to reassess whether or not that these people are wrong, right? If these people are wrong, it means that price is just going to come back down and just stay within the range. But if these traders are correct, what's going to happen is there's going to be some profit taking. Okay, there's going to be some profit taking Monday, Tuesday, Wednesday. Once the news comes up, we are going to see a blast off. All right, so I'm going to be really patient and wait for that Wednesday news. If your strategies already show you positions to pile in on your relevant time frames, do a small risk, put a small risk on the longs over here. Might be a good way if you don't want to miss the boat. All right, so instead of betting aggressively, follow your risk, follow your strategies, and just reduce your risk on your entries, especially the first couple of entries before the confirmation starts, just to position, just to get that one leg in case the market reacts a little bit more aggressive and a little bit faster than we actually expect it to. All right, so that is my plan for next week for the Kiwi yen in particular. All right, so what else has been happening and the other stuff? Now we have maybe this one is not super interesting for you. So we have the G7 issuing a condemnation of China. There's something going on with that over there. So there's some noise over there. Now, why one eye on China? Now, aside from the political fights they're having and stuff like that, what as traders we are interested about is how will it impact China's economic health, right? And in that same tone, how will that translate back to the other countries who depend largely on China for trade and trade relations? So who is going to be affected in this news? Okay, Australia and also definitely New Zealand. I mean, a small portion of it does affect what's happening over here. We are already seeing a little bit of weakness coming into the Aussies. All right, let's go for the Aussies a little bit. So if we look at just the Aussie dollar just as a bar, Okay, a little bit of weakness has been coming back into the Australian dollar. I'm not too sure where that weakness is coming from, but I think largely behind the scenes, all right, behind the scenes, the trade relations with the China market is not as robust as China would like us to think. So I think over on the news front, China has been saying that they are recovering. Growth is happening quite healthily. And if you look at their statistics, all right, if you look at their statistics, China's GDP, quarterly GDP was like 2.2%, one of the highest. Is one of the highest if you compare it across the major economies. Inflation is at 0.1%. I don't know how accurate that is, considering that we are looking at a US website. All right, so Trading Economics, let me just pop that website up. So Trading Economics, definitely. Oh, this is Trading View. Hang on, Trading Economics. So Trading Economics is a website that I like to use because, of course, it's free. All right, it's free, and they do up, and it's free, and plus it's updated. All right, it's updated now. While the information on here is not super fast, because if free stuff always comes a little bit slower. What I do like is I like the host of statistics that shows the comparisons between all the different economies, right? So inflation rate in China, while their GDP is at 2.2, this is a quarterly quarter over quarter GDP, inflation rate is at 0.1%. Now, what is it looking like? Surprisingly, right, what's a little bit concerning is their inflation rate is actually on the decline. Now, why, when inflation rate is low, it's not exactly a good thing, right? We need some inflation to have some productivity in the economy. Low inflation means that the economy is not moving fast enough, right? We need a little bit more movement. So if I compare a 10-year chart, so this is a 10-year inflation chart for the China market, you can see during the times where China was a powerhouse, that was the pre-COVID times, that was over here, right? It was over here. China was a powerhouse. 2019 pre-COVID times, inflation came all the way up here. After that, this is the COVID period, and then recovering from COVID. Now, for some reason, suddenly inflation is going down again. Now, this is the part where it is a little bit concerning, all right? Because when we have periods of China in growth, right, the inflation rate is kind of averaging-ish at around 2%. All right. And what we are seeing now in the last, not just one, but 3 readings of the statistics from the China side is that inflation is actually slowing down a lot. So hypothetically, right, that actually indicates that China's economy seems to be slowing down a bit, still seems to be slowing down more than expected. And again, with a pinch of salt, because again, this is like a US website. I'm not sure where they get their statistics from, or how accurate it is. I think it's just a ballpark somewhere, given that China sometimes does be, I think China is very careful about the information they let out of the country, right, in that sense. So I think from a political standpoint, do take the figures with a pinch of salt. Again, I would just assume that it is as accurate as it possibly can be, but it's just a bit of question mark over here. Why, while the world is in recovery with the high inflation rates, what's happening with what is happening in China? Why is their inflation rate popping towards the downside? All right, so when we look at articles like these, there was the article I saw. Okay, when we look at articles like this, I'm pretty sure a part of the reason is China's perceived friendship with Russia. The war is still going on, not sure when it's ending. There's a lot of stuff behind the scenes that's happening. I don't think everything is like 100% upfront and declared, considering there is conflict in the world. All right, so this is one of the articles coming out that's kind of saying that there is a positioning of power going on politically in the world. Everybody's in the US side is kind of, I would say, worried about China partnering up with Russia. That's like an old story. Everybody knows that story is there, but I think it's kind of starting to be reflected in the economic numbers. I'm not sure how accurate it is again, but I'm pretty sure China's import-exports is affected. If US has sanctions on China imports, it means that they might be diverting resources elsewhere. They won't be importing as much stuff from China as compared to a year ago. So why 1 year? It has to give the economy time to catch up, right? Just because they are going to tax China products coming into US, they can't do it immediately. Today, I want to tax China, tomorrow it happens. Now, the policies take some time to line up. And I think it's about a year in already. Biden has also been in power for about 6 months, 7 months. I'm pretty sure that a year in, like a year later, I'm pretty sure economically China is kind of affected with all the US. for a lack of the right word to use, I would say the US fears, all right, because they do not want to support China's growth. So I'm pretty sure a lot of resources are going to be diverted away from that. And which means that trading partners with China will be affected because there's two things. Number one, on the political front, number two, on the economic front. So there's a very delicate balance going on here. If I am, for example, Australian president, I'm sure that him signing deals, to create opportunities with China, he's got to do it very delicately so that US doesn't get upset. So it's like it's like the middle child trying to make peace in the family with mom and dad, something like that. So I think there's a lot of things going on behind the scenes that we have to start watching out for, because this is an outright declaration. I'm not happy with you, China. Basically, they're telling the world that G7 is not happy. And if it comes only from US, maybe it's US says it so often, it's not a big concern. But now, if G7 is coming out and making statements over there, I'm pretty sure behind the scenes there's some discussions going on how economically they're going to reposition themselves. All right, so I would recommend a close look on the G7, a close look, at least an eye on the G7, an eye on the China market, because there's going to be a change in economic positioning over there. How it will translate down, it's not going to happen in 1 week, 2 weeks, but this is something to keep in mind for if you are going to be holding positions for 6 months to a year, because something's going to change over there. All right, so that is more for a medium to long term. Where should we go hunting? I would recommend going to hunt for news. One thing is a little bit of a closer look at how China's economic partners, whether there's a change, right? Whether volume of import exports have changed, whether the trade relations, the renewed trade relations between China and whichever other currencies we're looking at, for example, China, Australia, China, New Zealand, China, the UK, all right, I want to see whether the trade relations has changed, because it will affect the way currency moves about in these countries as well. All right, so that is homework for you guys for the next couple of weeks to kind of figure out what's going to be the change in season. All right, so in the seasonal, when I shouldn't use the word season because we talk about seasons. I would say the change in era. Okay, the change in era. Next part, I'm pretty sure will be somewhere between China, Russia, and the US. I think everybody knows this, but what I'm more interested in is in form of currency. Where is money going to flow next? Where is money coming from next? And that is what really interests us as forex traders, right? We want to know where is money going to go next, and that is why we have to kind of look at China, because it's one of our largest export countries, largest import countries as well. They have the people, they have the money. We just need to find out where is the money going to go next. And once we can kind of figure that out, then we can start to see whether there's a new trend coming up. All right. So what I'm interested medium to long term would be Australia. Australia, I think Australia is one very close partner that I would like, maybe not another. I think mostly Australia. I'm just going to take a closer look at Australia and see how this affects Australia as a trade partner. All right, so that's probably homework for till we next talk again next month. All right, so that's all for me today. And again, my trade pick for the next couple of weeks will be Kiwi Yen, all right, based on the monetary policy differentials. So thank you guys, and I'll see you guys next month.